Our ore body at Palito and the ore body that will be developed and put into production at Coringa are high-grade subvertical narrow veins. Quality ounces is what it's all about. Controlling dilution is what it's all about. My saying always is, grade pays, tons cost. 40,000 ounces high-grade gold production in the Tapajós region of northern Brazil, at Pará state. It's a big artisanal gold field. We're the first operator in that part of the world, so we've got great local relationships. We've actually put a mine into production. We're mining high-grade gold, and when I say high-grade, I mean 8 grams, which really, I think, sets us apart from the rest, which is, people have got so used to 1-2 grams. We're 8, we're underground. I was the COO of Orvana Minerals in Bolivia before this job, and I've spent much of my career working in the Cornish tin mines. So like it or not, I'm very specialised in small underground mines. We've actually had to address the fact that there aren't very small underground mines in Brazil, therefore there's a people skill shortage. So we built a team which involved key management in the mine, which came from Bolivia, and we brought over a Peruvian contractor to help us with the selective mining. We have our ore body at Palito and the ore body that will be developed and put into production at Coringa are high-grade subvertical narrow veins. On the board itself, there's a gentleman called Eduardo Roslot, an old colleague of mine, mining engineer, Chilean guy, and he's been very important in terms of actually helping us with our funding. Probably people may or may not know that Serabi did put Palito into production in 2003. Back in the 2000s in London, where the company originally listed, there was, let's say, a lot of people in the stock perhaps shouldn't have been in the stock. They didn't really understand sort of junior mining, and I think the company did 2 things. One, it chased scale to try to meet shareholder expectation, but it also changed the mining method to try to because it was very difficult to find the right people for the job. So when we actually restarted this mine back in 2012-13, we got the right team in. The key to our success is really this team of mining expertise and, that we have in actually boots on the ground. Back in 2012, when we wanted to reopen this mine, gold price was high, the markets were terrible, there was no money out there for exploration, there was no money for resource growth, there was only money for cash flow. Cash flow, and it was hard to find. Eduardo introduced us to the Majev investment, or the Fratelli as it's called, one of our biggest shareholders. These guys put money in at risk where nobody else would. And they backed us.
And they're still there?
They're still there. They're a big shareholder. They basically went through 50% because they did want trading freedom, but frankly there was no one else coming in anyway, so that's where they were. So we reopened the mine very successfully, got up to 40,000 ounces pretty quickly, where we've now been for about 3 years. They underwrote the entire financing, took all the risk. The problem with that was our stock was incredibly tightly held. We had no retail, so they were ticking along quite nicely, doing 40,000 ounces, operationally terrific, corporately still with some problems. But back in 2017, we actually acquired the Coringa asset. Now, the Coringa asset was from a company called Anfield, which has now been rolled into Equinox, one of Ross Beattie's companies. The buying of Coringa actually, it was the catalyst to do another capital raise. Because we bought Coringa for $22 million. And we funded 5 out of cash flow, but then we obviously got to fund another 5, and then the final payment, $22 million in total. So raising of that money, we did a capital raise in March 2018. At that point, Greenstone came on board, and also River and Mercantile in London.
And just explain to people who don't know Greenstone, because obviously they're pretty well known in the industry. But
Greenstone are a private equity fund, London-based. They're invested in probably 10 or so stories, I would say, pretty much multi-commodity. All over the world.
Very technical
team, strong technical team. They work with us very well. They've obviously, like Clive and myself, for a long time. They've been trying to get into Serabi for a long time, and they've been looking for the opportunity. And obviously, acquiring Coringa was the opportunity for them to come in.
I think especially they know what they like, and they're very selective. And I've definitely shown them deals over the years. It's a very strong team.
A group called City Financial came in, and also we had a Swiss family office that was still actually in the story. Now this year, obviously we know that City Financial ran into some problems, and the Swiss family office also wanted to liquidate their position, which at the time was, that wasn't welcome news. So 6% of our stock was just basically dumped on the market in, let's say, the spring this year. And our price went from 40p to 23p. And we thought that was a bit of a nightmare. Absolute blessing in disguise. Because that stock just got picked up by retail guys for once, and I think you've seen our graph of our liquidity.
Very good.
It's amazing. I mean, we've just flatlined for about 4 years, doing all the right things, but not getting any unloved, no appreciation. But then all of a sudden, retail guys get hold of it. We've gone from like 9% retail in London to probably 16, 17%.
So you now recognise the importance of retail, family office, high net worth.
We have tried so much to get retail into this company, and all the time, every time, it's just been institutions. Palito basically is one plant which is plant constrained. We've now had a head grade of around 8 grams forever. Nice. So that's what we work with. And being plant constrained means we're not just throwing tons at the plant, we're actually throwing quality ounces at the plant. That's the important thing. Palito's in very steady state of production, 2 ore bodies feeding a central plant, 500 tons per day, between 7-8 grams per ton. That's what we do. And we're kind of limited at that at the moment. We don't really want to expand the plant. Our ore bodies, as you can see from the presentation, they are high-grade narrow veins. So what our business is to actually mine these veins as well as we possibly can, minimizing dilution as much as we can. Inevitably, even doing this by the best possible way we can, we still get some dilution into the system. Our ore bodies they are ore and waste. Yep. You can see here from some of the ones behind me. Yep. You probably can't see it too well, but that is the ore body. It is sulfides. The gold is inside the sulfides, and outside that is just pure waste granite. Yep. So the ore sorter is actually a waste remover. First of all, it'll take waste out of the system. Right. That will save us about $1 million a year in process cost. Yep. But more importantly, it actually liberates about 20% of space in the plant. So we can actually add more high-grade ore, and we can make our little plant go from 40,000 ounces per year to 50,000 ounces.
Very low cost, I'm presuming.
Virtually no cost. That almost goes straight to the bottom line. Our other new asset, which we are developing, that is actually build ready. People ask me all the time, why did Equinox or Anfield, which became Equinox, why did they sell the asset?
Sells the good stuff, right? Yeah.
Scale. I think at the time they probably thought the asset was going to be a lot bigger and was going to be their platform to build a gold mining company in Brazil. Although it's a very tiny deposit, it doesn't really work for anybody else except us. We're in the Tapajos, we're the only hard rock producer. Coringa's 200 kilometers down the road from Palito. There's little point two companies having two 50,000 ounce deposits in mines, let's say, in the same region where there's very little else. Right. So they belong in the same stable, there's no doubt. So the marriage occurred, we bought the asset. So we're now working our way through the permitting process. We've just submitted our new environmental impact assessment or statement. Because we have been in the region for, let's say, 10 years with the same authorities. We're not exactly the new kids on the block.
You've got a relationship, a track record,
exactly.
So just on that, so we're starting to build a picture of the types of facilities, mines, operations that you are comfortable with, and they're similar in profile.
Coringa is a greenfield site. It's drill holes. It's going to be a 40,000 ounce deposit. When it gets its full fighting weight, it's going to be another 40,000 ounces. The process plant is there. Little different to Palito. This process plant was bought from Troy's Andarinas mine in Pará. It's actually much bigger, so there's no capacity issue with this plant. Right. It's a very similar deposit, say, to Palito. We are just working our way through the permitting process at the moment. One thing that we do have already is we have the mining license. Which is something Equinox never got to, so we can start the mine tomorrow, subject to funding. I think there's an opportunity to maybe semi-mechanize this deposit, which would be great for cost. I would suspect that the ore sorting is going to work very well, and therefore, although we don't need the ore sorter from a capacity issue at Coringa, why process granite? Why not put an ore sorter in there? And again, it's all about ounces, it's grade. Right. Get that grade up as high as we can and get the ounces from processing as little material as possible.
So again, I mean, what's the timing on all of this in terms of
impact? We want to actually start the underground development in let's say before the end of the year, or certainly Q1. What we cannot start at Coringa yet is the process plant and the construction. We've got to work our way through the process. Now that's why the EIA has gone in. We'll get the approved. We hopefully will get what's called the preliminary license by the end of the year. That is basically the environmental impact assessment followed by the positive public hearing by the end of the year. If that all happens, that'll be great. Then we can actually launch into what's called the LI, which is the construction license. We'll then bring in a company like an engineering company to come and do the basic engineering, which is basically the design work for the erection of the process plant. That will probably take around 6 months. So we would like to think we've got the construction license by early Q3 next year.
Most PEAs have a variance of 30%, plus or minus 30%,
but our PEAs
right?
It's on
what you've done previously.
Exactly. So
and
I thought
I will buy that.
Well, I thought the consultants were being rather penal, actually, to be honest. I said, look, 20% contingency on costs on a mine that's just up the road that's identical to the one we're going to do.
Yeah.
So we're pretty confident that the 25 million we can chip into that, and there's also the all-in sustaining cost is coming in at about 850, and there's 20% contingency on that. Yeah. So we're looking forward to Coringa really bringing our costs down.
That's because most of your G&A is staying over at Palito,
it's all
right?
Palito, that's why it's loaded, yeah.
Right,
yeah,
so it's kind of, but the blended...
950, 900, 950.
Again, a nice number. Is there much you can do about that?
Basically, if we can actually get some mechanised mining in there, the gains are going to be will and ore sort of work at Coringa too. These are the real nice little gains we can get.
Is there a number you're chasing?
I think it'd be pretty tough to do
blended
underground mining much less than 900, maybe high 800s, but I think less than that. That's a hell of a stretch. 900 is fine for us.
Happy with that. Describe, if you can, what is the plan? Okay, right. We know where you've come from. You've done a great job describing that. So today, you've got a couple of assets, so you've got to deliver those.
Continue Palito as it is, add the ore sorter. Mm-hmm. Develop Coringa advance the permitting and actually get underground at the same time. And finally, on the organic growth, it's mine site exploration and maybe a little bit more in and around our current producing assets, Palito and South Chico. So all in all, base case 80,000 ounces. We think we can, with a bit of exploration success in and around our backyards, we can get to 100,000 ounces.